I don't hear anything.
Yeah, the music's not playing. Sorry, we're live. Hello, everyone. Just giving you a moment to join here. We'll get started in just a moment. All right. Welcome, everybody, to this TradeFinder Live for Tuesday, 18th of April, 2023. We lost our intro music there, so I apologize. We'll get started here in just a moment. But before that, as we do each week, we need to take a look at our disclaimer agreement. And basically, the main things to take away from this slide is that Elliott Wave Options is not a registered investment advisor in the United States. If you'd like to see more of this disclosure, please head to our website at www.elliottwaveoptions. Actually, let me correct myself, www.ewotrader.com. And joining us as he does each week to talk the markets and do all the heavy lifting, please welcome Rob Roy. How are you, Rob?
Good, John. How are you?
I'm well, thank you.
Good to hear from you. Not under these circumstances, but good to have you back. Appreciate you filling in for Zach.
You're welcome. Yeah, I know he's not feeling so well, so hopefully he recovers soon.
Yeah, for those of you I know, he's got a lot of friends and fans out there with the TradeFinder group, so I'm sure he would appreciate your well wishes. He's, from what I understand, really not doing well tonight, so hopefully he gets through this and is back with us again next week. So I'm sure he would love to hear from everybody.
Yeah, absolutely. He has our best wishes for sure. With that, I'll hand over to you, Rob, and I'll join you later on for the Q&A.
Sounds good. Thanks, John. All right, buddy. Welcome to TradeFinder Live. And as you can see from the market, we continue this upward move. As you know, if you've listened to any of these before, and I know a lot of you have, I like the 45-degree angle move. So when we have this little trickle to the upside here, that's good. What's the negative? Well, obviously the VIX is not good. So let's talk sentiment for a bit, and then I'll come back and look at that chart and show you where the zigzag is. You've seen it numerous times, but if you're bearish on the market, which from our YouTube comments, obviously a lot of you are, you're holding your hat on the fact that the VIX has gotten awfully low. So we broke this support level that we've held for the past year or so, around 19 or 18. So we're down at 17. In fact, closing below 17 today at 1683 was the close. So the VIX is getting really, really low. And from a contrarian standpoint, you look at that and say, all right, sentiment is overly bullish. However, there was a release today from JP Morgan that their investor sentiment was showing a 93% of JP Morgan's investors. So this is, it's a select group, but JP Morgan's investors are looking for the market to correct in 2023. So now we have, we've been talking about all these opposing signals, and now we get to the sentiment indicators, which are contrarian by nature, and we have the VIX, which is showing, you could argue, a lot of optimism. But then JP Morgan comes out and says their investors are saying, hey, we think the market's going to go to the downside, 93%. So there's some ammunition to continue to the upside. We know that there's a ton of money in money markets, so we know there's a lot of money that can come back into this market. So how do you figure this? How do you go from here? I've been saying this for a number of weeks now. I'm still in the camp of cautious optimism. And until something changes, that's where I'm going to stay. And the cautious is the word, but you can't discount the fact that the market is moving to the upside. And if a lot of you are wondering why, which I know a lot of you are, perhaps it's the fact that there's so many investors that are expecting a pullback. So they've parked their money in money market funds and they're waiting for the pullback to get into the market? At what point does the FOMO come in and all that money come into the equities market? That's the question in my mind. And so here's the big zigzag, the first one that we've been looking at for, gosh, how long have we been looking at this? And look where we are now. We're breaking back above the 61.8% level. We hit it, we backed off, we made a higher low there from where the B wave correction was. And now it looks like perhaps we're ready to move up towards that C wave extension. Then we take that off. And as we've been talking about here recently, we have this complex C wave that's giving us anywhere from 420 up to 443 as potential moves to the upside. So from a technical standpoint, dealing with Elliott wave and Fibonacci ratios, it looks like perhaps we can go higher. If you go back to basic fundamentals, you'll be looking at this area and say, hey, we're nearing a pretty specific point of resistance here. And we had that high back on the 2nd of February when we moved back to the downside here. But again, staying with just basic technical indicators, you look at the uptrend, and there we have a pretty significant set of higher lows. So what do? We put these two together, and where do we come out when we put these two together? We come out with that very large triangle that we looked at last week. And I know some of you get really you get your nose out of joint with the way I draw the lines. There is no rhyme or reason on drawing trend lines. There's a number of different theories out there. You can look at okay, well, we should be up here at the highs. Well, I like to draw the lines where we have the most touches of the line. That's my thing. I know there's you look at pivot points, the DeMark trend lines, etc. There's all kinds of different methods out there. But the bottom line is that we have a set of higher lows and we have resistance at 410. Let's just leave it at that, and you draw the lines where you want to. The bottom line is something is getting ready to happen of significance in the market. I think we're going to have a pretty major move. Is that to the upside or the downside? The expectations were that we were going to have the earnings season was going to come in disappointing, and that was going to be the catalyst to move the markets lower. Hasn't happened yet. So we'll see if that plays out. But for right now, we're above the 10, 30, and 50-day moving averages, and we're above 410. And in my mind, as long as those three things are in place, you have to stay bullish. Now, if we break back below 410 and have a follow-through day, we break below the 10-day moving average, and then perhaps the 10-day crosses back below the 30, all that changes, and we reevaluate then. And the comments that come out on YouTube of how come the Elliott wave charts change and stuff, I think that is the most impressive part of Elliott wave. So many indicators that we look at are lagging indicators, and they take a while to change. Elliott wave is probably the most responsive of all indicators that exists out there. When the market changes, because the market is dynamic, the market is not static, the market moves, it changes. And if you don't have an indicator that changes quickly with the market, you're going to be sitting there waiting on your indicator and following your indicator where the market goes against you until your indicator finally decides to say, oh, okay, well, the market's changed and 3 weeks have gone by and you're wiped out. So you need an indicator that is ready to change with the market, move on a dime, if you will. And that's what Elliott wave does. It will relabel the pattern quickly when the markets change. One of the greatest things about it, in addition to its proven historical accuracy, you've got an indicator here that's over 100 years old. It's been around a while. Now, a lot of people think they know Elliott wave, and I would submit that I would be suspect that people spent enough time going through and learning the intricacies of Elliott wave. It's challenging, it's difficult. Nothing worth having comes easy is something that I believe in. And so if you feel like you can go hand draw your charts, I'm saying that I don't think you know enough about Elliott wave. Unless your brain is smarter than a 20-page mathematical algorithm. Anyway, let's go back and look at the TNX. So interest rates have moved to the upside, and yet the market has continued to move higher. How is that going? Well, I think, I was more concerned if you've been listening to these broadcasts when we broke below 34. This was what was worrisome to me because if interest rates were going to continue down at that level, that meant that money was moving into the bond market. Prices and yields move in inverse proportion, as you know. And so I was worried that money was coming significantly out of equities and into bonds. And that was going to be a signal for a downturn in the equities market. But we reversed, we turned right back to the upside. And again, go back and watch these videos. You know that I've been saying that I like trading range here between 34 and 40. I think if rates stay in this area, then that's kind of the Goldilocks, if you will, scenario for equities markets. Now we are in a qualified 5-wave to the downside pattern. Wave 4 is the active wave. That's the current wave. Wave 1, 2, and 3 are confirmed. And so we're looking at wave 4. Where does that end? We're at a 36% retracement. So we haven't quite hit the 38.2% level yet. Maybe that happens right here around right here around 37. Apologize for the cough there. You're probably going to hear some more of them just to warn you, but to keep my throat as wet as I can. So dealing with the level there at 37 has some resistance, and that'll coincide right around a 38% wave 4 correction. But we're in that golden spot, if you will. And then we look at the dollar. The dollar had bounced up a little bit, but it's turning on back to the downside. And that's going to coincide with the trade that I'm going to share with you, because I thought we might have been a little bit early, but perhaps we've timed this really, really well. Looking for another entry into SLV, so I'll go ahead and share that with you now. This was an alert that we sent out to our alert subscribers at ewotrader.com. And those of you that have been watching TradeFinder know that we look for case study considerations each and every week. The difference is at ewotrader.com, our subscribers, we send out entry alerts, any adjustments, and exit alerts. So we hold your hand from beginning to end on any potential positions. However, on TradeFinder, we identify case studies and then you're on your own. So we did send out this entry alert on SLV, long calls in our impulse strategy, which is the directional based strategy. Slight gain so far that you can see. And I even made a comment here that I thought in the commentary section, because there's reasoning in here between it. So not only do you get the entry information, what strategy it's in, the exact trade, the mark-to-market graph, which shows how your position stands each and every day. Then we also have this chart that shows what we were looking at the time of the entry. And you can see we had gotten overbought on the SLV. We came back to the 10-day moving average. I even made him mention here that perhaps we were a little bit early. So we might be a bit early on this entry. There's my words right there. And so we set this up to where we normally put in $500 of risk per alert. You can see it was only 316. So I was leaving room in case we were a bit early so that we could add to it. And that was based on the dollar. So the dollar had bounced back up towards resistance here. And if it decided to go higher, if the dollar went higher, that was going to be a negative for the metals. But it seemed like a timely entry for SLV because we're going back up towards resistance here. So far, at least, it's worked out. That's played out. So we'll see if that continues. We do have a wave 5 that's labeled here. It's not purple, so it's not complete. We're still in the wave 5. We just bounced back up towards resistance. And if we turn around and come back down here and that wave 5 were to move down to 97, then we're going to have a heck of a good trade on the SLV. We'll see. Bouncing down from resistance is not a surprise. So we got to keep an eye on it and see if it holds this level, pardon me, or turns and moves back to the upside. So that's what we're looking at as far as the metals, SLV, and the dollar. And they are really hinging on the SLV. At least that's correlations. I was having a chat with somebody a couple days ago about how these correlations exist in the markets, and they last for a while, but none of the correlations last forever. They go for a while, they work for a while until they don't. And the correlation that exists right now is the metals are moving with the dollar. As the dollar weakens, metals are moving up. So as the dollar strengthens, the metals move back down. That's exactly what happened. How long will this correlation last? I have no idea. You just follow them until they don't work anymore. That's how trading goes. So looking pretty interesting here on the dollar, and we will be watching that 102 level. That's the key level, as we've been talking about before. So let's look at some of the rest of the markets with the DIA, the diamonds. No Elliott wave pattern in the SPY or the diamonds yet. And we talked about this on Thursday night with our alert subscribers. Every Thursday night, we do one of these webinars for our alert subscribers and have an extended Q&A. We try to answer every single question from our alert subscribers each and every week. And 340 is a major point of resistance here on the DIA. Can it hold? Well, we'll see. And, you know, you've got a low VIX. Again, if you're in the bearish camp, you're looking at this and saying, this is our spot. We've got the Dow at major resistance there at 340. We've got an ultra low VIX, ultra low recently, but not historically. We've gone down to 16, 12, and even below 10 in the last several years. Just in the last couple of years, it's been around 18. So you look at the DIA and say, okay, we'll see if that holds. Move on from there. I do apologize for the coughing. I know that's annoying. I've been on the other end of these webinars, and it gets aggravating. I'm going to power through this. And so if you can handle the occasional cough, then we'll get through this together. Looking at the Qs, moving to the upside here, you can see that we have resistance at 320. So we've been kind of hanging around there on the Qs. And I think that goes back to when we were looking at interest rates. Interest rates moving to the upside, that's where we're seeing the effect on the Qs. You can see that it hasn't really affected the SPY so much. It's been able to move higher. But you start raising interest rates, and that definitely has an effect on the Qs. So we've talked about that endlessly, and that's the expectation. If rates start to come back to the downside, you certainly have to wonder if, looking at the rates going up, are there some that are believing, if you listen to the Fed rhetoric, there's one more rate hike priced in, and that's what the Fed fund futures are pricing in. One more 25 basis point rate hike and then a pause. Are people not believing that? Or is money leaving the bond market and moving into the equities market? Is that why interest rates are moving to the upside? So, you know, you just got to keep an eye on both of these things. I've been a big believer for a very long time that you need to watch the bond market. The bond market has a lot of really smart traders, and it has a lot of money in it. It's got more money than the equities markets has in it. And so you don't have to be an expert in bonds. Bonds are pretty complicated. They seem basic, but they're pretty complicated. But I've always said, I feel like if you want to be a good equities trader, if you want to be a good options trader on equities, you should at least have a working knowledge of the bond market, because they are correlated. And so here we go with that resistance at 320. Can we break that? Well, if we break to the upside there, then wow, we might be off to the races, but we're going to have a tick down, I think, in rates, which could happen right around 37. Perhaps we turn and move back to the downside. But look at the forecast. If this wave 5 pattern plays out, then the Qs is where you want to be. So if this wave 5 pattern comes to fruition, the Qs are going to be leading the way out of it. So that's the place that you want to be in. So looking at the Russell on the small caps, we've moved back up. We were talking about this last week, that it would be nice to see the small caps get back up towards 180, put some distance between 170. As you know, you've been watching these, 170 to 190 is the trading range. So we have this range through here. And at least getting to 180 means we put a little bit of distance from 170. Why am I talking about that? The small caps are a little bit of a risk on indicator. We can have the Qs perform and the small caps not perform. But if you have the small caps performing, usually that means you're having some broad market movement. With all that money in money markets, with JP Morgan's release today that their investors, 93% of them are expecting a correction in this year, 2023. That's enough to create a little bit of a contrarian bullishness, I think. But we opened right at the 50-day moving average. We closed below it. We got to break above that 50-day moving average before you really feel good about the IWM, but at least it's off that area of 170. So let's take a look at Bitcoin. And wow, major move, had a little bit of reversal, but look, we rebounded right from it. Now that's key. And I've been talking about this for a while. I'm blown away by the Bitcoin chart, not because Elliott wave nailed it perfectly. That's a great thing. That happens a lot. 61.8% wave 4 correction. We're past 100% extension on the wave 5. We could go to 161.8, which I think brings us up to the 32,000 level, which I thought was probably the next level on where we would go here on Bitcoin. But the fact, as you know, that we've been able to consolidate this vertical move. I don't like vertical moves. They make me nervous because so often they get retraced, but nothing's 100% in the world of trading. So far, we had a great consolidation into that triangle. We broke to the upside there. Look what will happen. We came down and tapped the 10-day moving average on the low and then recovered back up towards the upside. Really, really impressive on the Bitcoin move. Why? Is it, as we talked about before, we actually did a webinar on it before with the halving that's expected to occur on Bitcoin first quarter of next year. And at least the last 3 times that one of those has occurred, about a year before that, started a rally in Bitcoin. Is that what's underway? Is there concern about our currency? Doesn't seem to be with the dollar. Is there concern about the banking system? Well, the Federal Reserve opened up that lending facility, and that seemed to curb all the concerns with the regional banks. So what's left? Maybe that's what's going on. Maybe this is a rally from that halving that's coming up that has occurred the last 3 times. So you got to look at these, I think. And we're talking about a risk on thing in my mind. And I'm not the most forward thinking person in the world. I admit that. I missed Bitcoin in the beginning. I've got friends that made a whole lot of money that got in early on Bitcoin. I wasn't that early, but you just can't discount the chart and what's showing there. And this movement to the upside. What's the reason? In the end, does it really matter? You just follow the charts. And so far, the charts are telling you stay long. If we reverse and come back down, look where the 10-day moving average is, or excuse me, the 50-day moving average. It's all the way down here at 26,000. So there's plenty of room to move around here and still be bullish. Where I would look for some concern on Bitcoin would be a break of the point of the triangle. So we get the breakout to the upside. You come down and test the 10-day moving average because we were overbought from it yesterday. That's classic. That's just perfect movement there. But if we were to break where the point of the triangle was, where the breakout occurred, then that nullifies the breakout. So that means that you reset everything and you go back and say, okay, well, forget the triangle, forget the breakout. Now what do we see? So you go through a complete reset if that happens. So in my mind, Bitcoin has to break below 28,000 and close below 28,000 before you're not bullish. As long as it stay above 28,000, I think being bullish on Bitcoin makes an awful lot of sense. So I hope that made sense to you. Let's look at the EWA for our friends down under. And you can see that we've had this pretty nice move. We got a little bit overbought last week. We've come back down. Nice move back to the upside today. Really classic 5-wave pattern to the upside, holding above the 10-day moving average. Really nice bullish cross there of the 1030 moving averages. A little bit of resistance ahead here at 24. Can we get through that? If we can, then hey, we should be good to go up towards that wave 5 target. So that's what you're looking for. I know you could look at it and say, well, wait a minute, the wave 3 highs at 25. Isn't that going to be resistance? Could be. I just don't think it's major. It's a pretty nice pivot point, but I don't think it's significant. I think that the most significant resistance we've gotten through already, which was 23. There's a little bit here at 24. Get above that, then we just have that wave 3 high. So maybe we bounce down a little bit, but pretty constructive looking chart there on the EWA. And remember, both the Canadian and Aussie banks, their central banks, are already on pause, unlike the Federal Reserve, which we were wondering, would that give them any, mode to maybe pause themselves. Doesn't sound like it. Listened to a very long interview with one of the Fed governors today. He seems pretty intent. We're doing another 25 basis points. So he didn't leave. It didn't seem like, at least he's only one, but he's definitely voting, at least if he was telling the truth, that he's going to vote for another 25 basis point rate hike. That doesn't mean that it's going to happen. He's only one voting member, but we'll see. They seem pretty committed to it. Now, when we look at Canada, now we have a little bit of an overbought scenario here away from the 10-day moving average, 36 being resistance here. So can we get above 36? Man, if we can get above 36, look at this on the EWC. We could be looking at perhaps bumping our head at 38, but I think maybe up to 40, 41 to where we could go. However, we got to get above 36 first. So we're looking ahead. Can we break above that level? We've got to worry about this slightly overbought condition as we're nearing resistance. Maybe we go sideways. Maybe we have a little bit of a pullback. We'll see. But gosh, if you're looking at the EWC, if you're wanting to trade the Canadian market and you watch this as your indicator, a break above 36 with follow through, I think you go hard long. We've been joking in some of our recordings lately, our live recordings on the Hub Financial channel on load the boat, back up the truck, whatever your favorite cliche was from back in the end of the 90s, 1999, when everything seemed to be going to the upside. And there was a lot of those cliches that came out. So pick your favorite one, but you break above 36 and you might be looking at one of those type of scenarios. How's the INDA doing? India, which made a really nice comeback. And then we lamented about this last week. If you watch this, we talked about, okay, it's been a really nice move, but is this just the way for correction, or is something stronger afoot here in the INDA? Well, we have a lot of subscribers from India. We've answered a few of their messages today, but we look here at 40 and we broke above it. We came back down to test it. It doesn't mean that all is lost and we're heading down towards this wave 5 low, but it certainly makes you think maybe. It's going to all depend on how we handle 40. Can we hold here? We're still above the 10-day moving average. We still closed above the 10-day moving average. If we can hold 40 and move back to the upside, then we have a chance of disqualifying this 5-wave pattern. But right now, it's very qualified. It looks great. And you have to be concerned in the back of your mind about the potential of a drop here all the way down to that wave 5 low. Doesn't mean it's going to happen yet, but a break of 40 and you just don't have much to hold your hat on. If we get a break below 40 with follow through, that would be pretty grim. So we are at a major point that needs to hold for the INDA. So if you're looking at that market, keep your eye there. That's what you're wanting to look at. So when we look at Germany, still super impressive, probably the best of all the international markets, at least the ones I look at. It is right now. And it had been ugly for so long, it makes sense. We've talked about that kind of psychology in the past, that you've had a market that underperformed for years, and now it's the one that's overperforming. That's where money goes. Money looks for, okay, things are changing a little bit. What's underperformed? Where can we get the biggest bang for our buck? You go to what has not worked in the past, and that's what's happened here with the EWG. I'm just so impressed with this move to the upside that we held there. We had a little bit of a retracement, enough to test that wave 3 high there. So we tested the wave 3 high, held it perfectly, moved back up, broke above resistance at 28. I mean, there's what's not to like on this chart. Bringing in the DMI, check that out. That's setting up like Germany's just getting ready to run. You look at the positive directional indicator moving up, the negative moving down. The ADX is above the negative directional indicator. It's above 20. That's as good of a setup as you can find. What does that mean? If you're not familiar with the DMI, it's telling you there's strength to this move. When you see a setup like that, it's telling you there's strength to this move, and it's likely to continue. As we know, there's no such thing as 100% in the world of trading, but it's telling you, hey, that's a pretty strong move. Pay attention to it. If you're looking for a place internationally to put your money, you could do a lot worse than the EWG right now, I think, based on the way those charts look. And that, this price action here, basically since October, has been just really impressive and spot on with LE wave and Fibonacci ratios. Just absolutely as good as it gets. All right, let's go back and look at some of our previous case study considerations here that we've looked at TradeFinder. We still have MPWR, which I've talked about this before, but this one's so much fun to watch on a daily basis. The amount of, look at this movement intraday on this, and this was going back to the entry, and it just continues to do that when you watch it and you see this back and forth. In the end, it's gone nowhere, but the intraday movements, it'll move 30 points a day. From the high to the low. Like, let's say what was the high today was 490 and the low was 471. All right, it's only 20 points today. So that was a weekday, but you get a lot of intraday movement out of this. But the bottom line here is we have the 10, 30, and 50-day moving averages all right at the exact same spot. As long as we hold above this wave 4, I think you stay long here and give it a chance to break out of this. There's no harm, no foul other than time decay at this point in time. But if it breaks to the upside here, you'll recover that in a very short period of time. Looking at a strangle that we had on FFIV, we talked about, it's gone sideways. Maybe you want to consider taking that off. And if you haven't already, maybe you want to hang on now because of this move to the downside today. But if you took this off because it had been a while without a breakout, I would certainly have understood that. I just kept it on for those that may be wanting to continue to watch it. But it continues to go sideways. We've had this little bit of a creep up here in the ADX, and I can tell you that this is an outlier. I looked at a lot of triangle patterns with low ADXs in my time. Is kind of how I made my name in the world of options trading. Trading these patterns, and this doesn't happen very often, but it has. And as I said, nothing's 100%, nothing works every time. And you could argue that, gosh, all we did was form a much bigger triangle than when we looked at it originally, and was today a breakout. So that's why I'm saying if you're still in it, then all right, give it a chance and see if it follows through to the downside tomorrow. Otherwise, if you're out, yeah, I totally understand that. Amazon, same thing with a triangle here, and you can see where the entry was. And so far, we've broken to the upside, and we have a pretty nice setup here on a zigzag pattern, which if that zigzag pattern holds true, we could have a pretty nice trade here as a result. But nice breakout to the upside on Amazon. Earnings are coming up. Let's see, when not too distant future here, I think we have earnings on Amazon. Yeah, you can see it's not too far away. That could, if you're still in this one, you probably just go ahead and hold it. Perhaps if it continues to move to the upside into earnings, maybe you rebalance your deltas. I've done that before, which if you get a breakout before an earnings report and you want to hold it through the earnings report, and so you have more deltas on the call than you do on the put, maybe you want to add some puts, whatever. You can unbalance the number of calls and puts to balance the delta, if that makes sense. So you unbalance the number of calls and puts, but you balance the deltas between the two going into earnings, or you just go ahead and take it off before earnings. Those are the two choices that you like to do prior to an earnings report when you have a scenario like this. So upward breakout. If we get enough of a move into earnings, then perhaps you take the position off altogether and don't even worry about earnings. Get off ahead of it, because you're going to get an IV rush on both the call and the put going into earnings, and that will allow the call and the put to go up in value. And so you could have a nice gain. I've had strangles in the past that the stock didn't move at all. And as we moved into earnings, they pumped in IV, both the call and the put went up, and there was a nice gain in the trade. Stock didn't move at all. So you just, all right, well, why do I want to hold it through earnings? I got a profit anyway. I mean, you take it off. And, that's something that can happen with a stock like Amazon, which can have some volatility on the breakout. So we looked at Adobe to the upside and done nothing. So no reason, I don't see any reason to change here with what's going on with Adobe. We look at that one. 2 weeks ago. And it's just sat right here at 380. As long as we stay in this area, as long as we stay above the 10-day moving average, I think you hold that one. If you're interested in Alphabet, Google had made that nice move to the upside, so probably took it off then. If you didn't, maybe you got a touch greedy. So if you're still in this one and wondering, what do I do now? I didn't take it off when I got that big upward move. I think you stay with 105 now as your stop. I don't think you want to give it all the way back to 100, because if you go to 100, even though the 50-day moving average is there, you can see where the wave 4 is. You could break 100, and we just don't want to fool around with that. So we're back down to 105 today, and as long as we hold that level, if you're not out of this one yet, I think you stay long. But perhaps you're already out of this one and took a nice gain. Now here's one. We've had a very impressive record if you go back and look at the case study considerations that we've had in TradeFinder. But watch this one. This is not going to be one of them because there was a big move to the downside there. So this was, probably shouldn't have used this one as a case study consideration last week because of the fact that we had this vertical move. Bitcoin has been violating that rule. Not many of them do. I don't like vertical moves to the upside because this is what happens. You get a vertical move to the upside, quite often it comes vertically back down. So if you were following this one, you're like, yikes, I didn't like that move to the downside here on the 14th. Well, the one positive thing you can have is even with that move down, we held a higher low. Now we're below the 10-day moving average. The 10-day hasn't crossed the 30. If that occurs, then I think you're out altogether. But if you're following this one and you haven't exited yet, then I think maybe you stay the course and see if this trend line holds with the higher lows. If we can get back above, it's not that far away, the 10, 30, and 50-day moving averages, and see if we can move back to the upside there. So if we put the earnings reports on, you can see that. Why did that move ahead of earnings? So that was another sector movement. So you still have an earnings report that could come in, and with the way the housing market is going, you could make an argument of the fact that with so many people buying homes, they need a place to store stuff while they're waiting on their homes to get built. If you look at the home builders, my goodness, that's one of the areas that I just shake my head every week on how they're performing. So, perhaps you hold it through earnings and see if you get a bounce on earnings and recover this downdraft. And so this move here was just filling the gap. That was no big deal. But the move down here on the 14th, that was concerning. But as I said, we still have the higher lows. So that wasn't our best look there on TradeFinder, but our record's been pretty good. Now we're going to go ahead and take a look and see if we can find anything of interest. So, this is interesting here. As you know, I don't look at these ahead of time on TradeFinder. I update the charts and I wait, and we do this together so that you can hear the thought. Oh, look at there. There's KB Home right there. There's one of the home builders. Let's see what that looks like. See what I'm talking about? I mean, with interest rates moving to the upside, the home builders had a little bit of a move down, and then they've been powering higher. So there's some of your fundamental basis on public storage, on why maybe you stay there. This just is mind-boggling to me. At some point, you'd have to think the housing market is going to give in, but it hasn't yet. So do you want to chase that? It's in a really nice Elliott wave pattern. We don't want to let our personal views get in the way, and look at the volume behind that. It's solid volume on that move up today. And if we look at the DMI, you can see that it looked like it was calming down, and it has completely reset, separating between the positive and negative directional indicators. The ADX is turning. I like it better. For those of you that have been viewing for a long time, you know that I like it when you have one of these moves down, that when the ADX moves down like this, it actually breaks below 20 and then turns back up. Maybe technically it did by a hair there, but barely. I would have preferred a little bit lower on the ADX and then turn back to the upside. I would have felt better about that. We do have some resistance here ahead. So, you know, you got to be concerned about that. I always give you, as you know, the aggressive and conservative viewpoints on these. And this one, I think, is the same. I just think we're right there at 41. You got to wait. You got to let it show me the Missouri. Show me that we can break above 41. And then if you do, we have plenty of room to move to make a nice trade on KB Home. So for me, that's a watch list. If it breaks above 41, then you go long. If it doesn't, then you stay here. ORLY is one that's on my list every single day. I watch this stock every day, and look at that. Look at that move there. You want to see something that's been impressive. And there's my, you know, nice, calm 45-degree angle. No weird stuff going on each day. Just a nice, steady move to the upside. Those are the ones that I like because they tend to hold. You can look at this and say that it's a bit mature in the move. We're not inside the tap box yet. Time and price projection on where that wave 5 could go. It's only at a 49% extension. We had a, call it a 38.2% wave 4. We should go to 61.8, which I think brings us right about to that wave 5 is the way it looks. So that one looks awfully good to me. So take a look at that. From a bullish standpoint, I think that one looks good. But I also wanted to show you something that we sent out to our subscribers today, and I'll just bring it up here and show you so that you know that I'm not just making stuff up on EMN. And I think with the VIX below 18, you really want to pay attention to these triangle patterns. Look at this. I'll show it to you live here in a second, but here's the chart that we sent out. Nice symmetrical triangle. The ADX is very low, down around 10. You've got an earnings report not too far away. This one is really ripe to move out, I think. So I'll bring it on this bigger chart here, Eastman Chemical, and you can see that symmetrical triangle is formed. The 10, 30, and or the 10 and 30 at least moving averages are at the exact same spot. You can see that ADX trying to break above 10 there, moving to the upside. But there's your triangle pattern. And I think this one looks really good, especially with that earnings. Look at that set of higher lows or lower highs there. And so higher lows and lower highs both look great to me. And then we add that earnings report back on. Those of you that are not familiar with the software, it's called Profit Source. You can find out more about it at hub.com, HUBB.com. To me, it's the best Elliott Wave software that exists. I've tried all the ones that I know to exist. I'm not going to say I've tried them all because there may be some that I don't know that exist. But what I like about this is it's programmed exactly to Ralph Nelson Elliott's algorithm. There's no personal adaptations. And there's a lot of Elliott Wave software programs out there that are personal adaptations from the general algorithm. And, you know, if you don't have that person's viewpoint, how do you even know how to read the charts? But this, I mean, they don't set up much better than this. A really great symmetrical triangle, the moving averages converging right at the point of the triangle, an earnings report not too far away to yield a breakout, a very low ADX. So I think that looks good. So let's just go ahead and leave both of these. So we'll put both of these on for this week. And hopefully we get some sort of recovery. We haven't had very many losing trades in TradeFinder over the years that we've been doing this. There have been very few. Maybe PSA becomes one of the handful that we've had. But for now, we're going to look at EMN, and we're going to look at, so that's a triangle. And then we're going to look at ORLY to the upside to see if it goes into that wave 5 target. O'Reilly Automotive, you probably have one near you. They're everywhere. So that's what we'll look at for today. And with that, John, bring it back to you, and we'll open up for any questions that may exist out there.
Thanks, Rob. Some interesting stocks there, and we've got plenty of questions coming in. I'll just say in advance, you know, we've got several hundred people live across the various platforms that we're streaming to, so we're not going to get to everybody's, but we'll give it a go as long as we can. Rob, I thought Will had a question in relation to, can you have a look at the Dow Jones transport relative to the industrials? I thought that was probably a pretty interesting question.
Okay.
Obviously, Dow theory.
Yeah. It used to be DJT. The symbol for the transports has changed. There it is, Tran now. So you look at this, and yeah, for the Dow theorists, that, and if you're not familiar with what Dow theory is, very general, a little bit more to it, but the theory is that the transports are a good indicator of the market in general. So as go the transports, as goes the Dow. So we have a wave 4 here right at the 61.8% fib level. It held a major point of support that it needed to hold right there at 13,600. We're back above the 10-day moving average. The 10 is trying to cross above the 30. We do have a little resistance here, as you can see, that it's having trouble with over the past week or two. Those highs all bumping against this level here at 14,400. So I would submit that if the transports can get above 14,400, this was a pretty just kind of a down trend line there of lower highs on the way down from the wave 3. There's not really any kind of resistance like we have here at 14,400. So if we could get above on the trend, above 14,400, I think we're off to the races here. Maybe a couple bumps of the head here, perhaps one right up here at 15,200. I don't see much in the way before that. It was a pretty significant move lower from there. And if you could get above 15,200, I don't see anything stopping it from going up and hitting that wave 5 target. So great question, Will, and good insight on Dow theory. Dow theory has been around forever. I've often made the comment that when you have these phrases, these old school type of things that, the indicators that have been around for a while, they've been around for a while because they work. If something doesn't work, it doesn't last. And, I talked about Elliott wave being around for over 100 years. If Elliott wave didn't work, it wouldn't have lasted over 100 years. Nobody would be talking about it now if it wasn't viable. So for the naysayers there, I just say learn more about it. But really good question. We hadn't looked at the transports in a while, but if we could break above 14,400, that would certainly bode well for the market moving higher, at least for the Dow. And, the Dow's right at that resistance there at 340. So we have resistance here on the transports. The two of them could break together, and we could have some movement to the upside. Or on the opposite side, if resistance holds and we turn and move back, then you would be looking for, can support hold at 13,600. So at a very key level here at 14,400. Great question.
Thanks, Rob. We had a question from Paul on Zoom about Google, which you've already covered. So I'm going to move back to YouTube, and a different Will is asking if you could take a look at MCRB, please. That's the one.
Yeah, I'm not sure I've ever looked at this one before. Crazy couple days, I can see. Big move up yesterday and gave it all back today. We have an earnings report here on the horizon, and the positive news here, there's good and bad in this. The positive was he blasted off from an area. Our long-term viewers know that when we look at this, I've called it the launch pad effect. To live on the Space Coast, can walk out my backyard and watch the rockets go up, which SpaceX seems to launch one every week now. But when you have this sideways stuff, quite often you get the blast off move. But what you don't want to see is an immediate retracement, which is what happened today. So the negative is it gave yesterday's move all back today. The positive, if there is one, is it did hold 6. So we didn't break below. We didn't blow up the launch pad. We held the launch pad. Maybe the rocket can refuel and take off again. But if you're looking to go along this is a real easy one from a risk to reward. 6 is your stop. If it can stay above 6, then you have a chance maybe of turning and going back to the upside. You got an earnings report. Like I said, I don't really know much about this company. So perhaps the person that asked the question knows a bit more about them. But from a technical standpoint, if it can hold above 6, You could do a speculative long position here, knowing that this give back today was the last thing that you wanted to see. It could have come back a little bit, but you didn't want to see it give everything back. That's the negative. But 6 is support. So as long as it holds here, perhaps, you wait into earnings if it can stay above 6, but it breaks below that, then it starts to get kind of ugly. Then you have to hope some of the aggressive mutual funds, which are the only ones that can own single-digit stocks, you have to have an aggressive investment objective as your investment objective to own single-digit stocks. You have to hope they come in and try to support it at 5. That's your only chance if it doesn't hold 6.
All right, thanks, Rob. And got one from James who's asking, I'll say in honor of Zach, can we take a look at NVIDIA, please?
Yeah, if Zach's listening, he will appreciate that. Yeah, no, appreciate somebody asking. And pretty interesting day in NVIDIA today. Gave some of the movement to the upside back, but it was a gap up. Nonetheless, we've got a little bit of resistance here. It was sure tempting to pull the trigger today on NVIDIA, I'll tell you, but the fact that it held the high of 280 kept me sitting on my hands, but sure was itching to move to the upside. Hate the gap. You all know that. I wish it wouldn't have gapped up, but it did. AI stuff again, AI is everywhere now. Everybody's talking about it. We have a strategy based on AI. I feel like we were one of the first that's out there that actually has an algorithm for finding trades based on an AI system. But it's everywhere now. And then you hear all the positives and negatives of the commentary from Elon. Some of the people saying we need to pump the brakes here on AI, but it doesn't seem like that's happening. It's off to the races. But anyway, back to NVIDIA, you would have to be concerned about this gap getting filled. If it could come down and touch that 10-day moving average and bounce, that would be nice. But for me, and the reason that I didn't do anything on this today, I wanted to see it break 280 because it held that as resistance back over here at the end of March. So even though it was a nice move today, you still had a good 2.5% movement to the upside, kind of a bit of a doji there, closing more near the open than the high of the day. You would have liked to have seen it close near the high of the day, but got a tiny bit overbought from the 10-day moving average there with 280. So I just think that as I said, I give the aggressive and the conservative views here. Usually, I just think they're both the same here. I think you want to see a break above 280, and if it does, then NVIDIA's power continues. I actually heard someone say today when they were talking about NVIDIA on the financial networks that, well, it just seems like the multiple doesn't matter anymore. That's not what you want to hear, because that's, from a contrarian standpoint, when even the fundamentalists are like, we give up, they're throwing in the towel on NVIDIA because it has a high multiple. There's no doubt about it. And when they're saying stuff like that, that's like, don't say that, because, it's almost like the kiss of death sometimes. So I just think with all that going on, you want to see it break above 280 first. But yeah, it was in the news today. Nice move. And thanks for the nod to Zach on that one.
No worries at all, Rob. Going back to some people who got in early on the YouTube chat, can we take a look at Nike, please?
Oh, wow. I haven't looked at Nike in a while either. So that's a good one to look at. And so pretty nice move there above 125. I think that was really impressive. You looked at the concern of, was this wave 5 over? I mean, you had a 50% wave 4 correction, basically went to 100% extension. You move back down. All right, this one's retracing back to the previous 4, right? That's what you would have thought. Not so fast. It held above the wave 3 high, so it didn't break below that. And even on these lows, right at the wave 3 high, move back to the upside. So this one I think is pretty easy as well. Your risk is not too far away. As long as it stays above 125, I think you can go long Nike. If it breaks below 125, you'd have to realize that you're probably going down to 120. So if it doesn't hold 125, you're probably going to 120. Can you stomach that? If so, then stay long. But a break below 120, then it starts to get dicey. Then you're probably looking at least 115 and maybe the potential of all the way down here. I think the market would have to really start to get extremely weak to see that because it had a chance and it didn't do that. It turned and reversed. So aggressive long, as long as it stays above 125, you stay long. That's it. If you have a little bit of a risk tolerance, if it breaks 125, you can stay in as long as it holds 120. I think it's hard to be long if it breaks below 120.
Thanks, Rob. Lisa on YouTube is just saying, as long as Kramer doesn't say it's a buy, you're fine.
Oh, don't get me started there. I'm just going to bite my tongue and move on. But great comment.
Somebody's also mentioned that if you could take a look at Schwab, it seems to have held at 52, which was where you had projected, I think, that it was going to hold.
Yeah, and you know, we talked about this before on the fact that Schwab got caught up because Schwab has a bank and they got caught up in all that regional banking stuff. So they came down here and they held where they needed to hold. And, you know, earnings report, moving back to the upside, and all of a sudden, oh, it's not so bad. You know, they don't have the issues that it just was like, you know, the old expression, again, another old expression, you know, throwing out the baby with the bathwater. It's just like, just nobody wanted to touch anything on regional banks when the SVB and Signature News and all that stuff came out. And Schwab got caught up in that for really no good reason. And so you're seeing them start to come back to the upside. And you know that this was a vertical move down. And I've said this before, it works both ways. I don't like vertical moves up. I don't like vertical moves down. And if you're looking for a place to put some capital for a long position, I think you could do a lot worse than staying long Schwab above 50. It broke back above the 10-day moving average. You had follow through from yesterday on the earnings report. And yeah, I think, you know, it may not be a quick move back to the upside, but, you know, look where it was. It was doing just fine. No issues there for what, 6 to 8 months, 6 to 9 months until that banking news hit, and they just got caught up in it. And so you would think at least that you're going to go back up to where you were. So there's some pretty good upside there. I like that one from a risk to reward standpoint. Great question.
And Rob, maybe sticking with the same area, we had people request a look at Robinhood and also TD. So HOOD and TD.
Good old Robinhood. I haven't looked at that one in a while either. So yeah, here's where are the big boys going to come back. So let's go back and look at volume, and you can see what happened here when we broke down below 10. That when you see that kind of volume, that's institutions getting out. And so we bounced around here, and maybe, yeah, maybe somebody, you know, took a shot at it when it got back above 10, but nothing of significance. You'd certainly like to see, this is not what you want to see your 200-day moving average of volume look like to the downside there. But then you can make the contrarian argument, okay, everybody's forgotten about Robinhood. Maybe it's a time to get in. So, you know, there's always two sides to every story, right? That's what makes markets. And I say that, you know, on the comments, and we can disagree. It's okay to disagree. That's what makes markets. You have to have a buyer and a seller on every trade. So basically someone's bullish, someone's bearish on every trade. But, you know, let's just be respectful of each other's opinions and realize nobody's right all the time. So when you look at Robinhood, I would prefer to see it get back above 10. There's not any new institutional buying coming in. From a technical standpoint, you have this set of higher lows, but you've got a massive ascending triangle here. Let's let that play out, I think. So if it could get above 10 with follow through, I think Robinhood looks really good. Maybe it comes back from the dead. I just want to see that. It's so close. Let's see that. And if 10 holds, you might bounce back down to 8, but you held a low here on the 24th of March where it looked like that's where it was going, and it didn't. So if you wanted to be ultra speculative and guess the breakout, which I don't recommend, because when you see triangles, it trumps everything. They can break either direction. There's no rhyme or reason. This one doesn't have an LA wave pattern on it. It's just simply a corrective triangle. But just from purely old school support resistance. I would want to see it break above 10. If it did, I think you might have something there. So looking at TD Ameritrade, was it is it AMTD? Is that
I know, I think it's TD.
just TD?
I think so. You might need to just get rid of that W and do a search there.
Yeah. I don't think a lot of people know that TD was Toronto Dominion. I did. That was my broker way back when I first started. That's crazy how things come around. But when you take a look at the chart, it's got to get back above 65. It isn't a 5-wave to the downside pattern here. Maybe because they're a bank too. Maybe they had the same thing that Schwab did, and they're moving back to the upside. You're about to get a 1030 positive cross. If it gets above 65, we might disqualify this 5-wave to the downside pattern. But I would note, I think you have a trade here from 62 to 65. I would be shocked if it doesn't test 65 with this move. It looks pretty strong, and there's a little zigzag pattern here. So hard to imagine from, oh, look at that, the 100% extension right at 65. You can't make this stuff up. It's right there. So I think you have a move from 62 to 65, and then let's see what happens at 65. If it can break above there, you stay long. I think you have a short-term trade here. It looks like it wants to move up there. So I like that trade from 62 to 65 and then reevaluate.
Thanks, Robert. I can see we're at time, and I'll just apologize to everybody. There's still symbols coming in, Yagandra and Samuel and Philip. We're just not going to get to all those because I'm still working through a couple that came in earlier. So, Rob, should we do another one or two?
Yeah, let's do one or two more, and then that'll be at least. I'm not coughing anymore, so I'll give one or two more in.
Don't say anything. Just push on. All right. So let's take a look at Disney.
Good old Disney. Yeah, local to where I live, and just gosh, the amount of news that they've had is off the charts. But they got eyes are back. So you take a look at this chart, you could do a lot worse than a strangle here. But let's take a look and see where the ADX is. But really nice set there of higher lows. I'm not such a fan of the upper trend line. I like more touches of the line than that. Basically, you've got the high and the point. I would prefer to see more. The ADX, it's not even quite to 15 yet. Yeah, I guess it just broke below 15. With the VIX this low, I like to see the ADX get below 13. I mean, with a 16 and change VIX, you want a lower ADX when you're looking at these triangles. What does that mean? It means that we could churn just a little bit more into earnings perhaps. But then the negative is you don't want to put it on the day before earnings because they start pumping the volatility in a couple days before earnings. So go ahead and put on like a strangle here, I think, on Disney. And the only reason I say that, Disney is not historically a huge mover, but that's a big triangle. You look at the mouth of the triangle from 85 to 110. That's big. So that's a 25-point triangle, which means there's likely a pretty significant move coming on Disney. And I can tell you the theme parks, tourism, there are people everywhere here in Florida. So, perhaps they have an upward surprise there. And then look at this. What a chart. The support resistance just pierces the triangle. Look, I call that an arrow. When it does that, when you have support resistance, it happens to coincide exactly with the point of the triangle. So you got earnings not too far away. I really like this one for a strangle, but I couldn't pick a direction on this. No way with that pattern moving into earnings. It's not in a 5-wave pattern, but I really like a strangle on that. I wish the ADX was just a bit lower. It doesn't show up on my search right now because I want to see that ADX below 13. Otherwise, we might have sent that out to our alert subscribers, but you could do worse on a strangle than this one for sure. I mean, it's consolidated for 2 weeks now, heading into earnings. Probably nothing happens before earnings, but if you wait, again, you risk having extra IV and paying more for your strangle than if you did it now.
Thanks, Rob.
So
And
one more.
as a final one, we've got a question from SSH, who is actually saying that he lives close to you in Orlando.
Oh,
He's
wow.
asking for you to have a look at LPX, please.
This is another one I haven't looked at for a while. It's a railroad, right? Louisiana Pacific.
Yeah, Louisiana Pacific. That's it.
Yeah. 60, man. Just great move there. Nice 1030 cross. The problem that we have here is we're at resistance and we're overbought. That's the negative. Too much separation here, which means that if it breaks 60 tomorrow, I just don't think it holds. That's what happens when you break a major point of support resistance and you're already overbought. Tends not to hold and comes back down. So what you would like to see is, a little bit of sideways, let the 10-day moving average catch up. And when that happens, we're going to be right at earnings. So this is almost like a flip of the coin. If you feel like they're going to report good numbers, you could talk about this gap that hasn't been filled yet. And could that occur on the earnings report that it moves back to the upside? This would be like, for me, super speculative money. Like this is just, a lotto ticket type of thing, and see what happens. I still wouldn't do it now because I would like to see that 10-day moving average catch up, because if it breaks above, it's probably coming right back down and you get a better entry. I don't know that this is not like one of those stocks that's going to have a ton of IV pumped into it before earnings, maybe a little bit, but wait a day or two, let that 10-day moving average catch up, and then, pick your direction one way or the other. But I don't know. It feels like you want to lean long here, but that's a really, really interesting one. But again, it would be very much on the speculative side and just money that's okay. If I lose it, no big deal. Or the opportunity, if it breaks above 60 and goes up to 65 and fills that gap, then you have a really nice trade out of that on earnings. So that one looks really, really interesting to me. I like the technicals and everything, other than the fact it's overbought right now. Wow, we had some great ones tonight.
Yeah, absolutely. Constantine says he reckons this one's a 100% along, just for your information.
Oh, no, Constantine, you just got to go short now. There's no such thing. Oh, yeah, there you go. Now there's the jinx, everybody. So like we're going to look at this next week. I'm going to write this down because now we got to find out. We might have to wait another week, but I'm going to make a note of this now because of that, just to see, out of curiosity. That's great.
All right. Thanks very much, Rob. I'll leave it with you and we'll wrap it up.
All right. Thanks again, John, for filling in tonight. Good to hear your voice. For those of you that have been watching this for a long time, you heard John way back in the early days before Zach took over. So blast from the past here tonight. Thanks as always, everybody, for spending your time with us tonight. We are very respectful of it. I'm super passionate about the fact that time is the most valuable asset we all have. And we do very much sincerely appreciate when you devote your valuable time to us, and we do our best to make it an informative, educational use of your time. Thanks, everybody. Have a great rest of your week. Look forward to talking to you again soon. Take care, everybody.